Okay, let's go.
All right, today we're going to dive into a concept that honestly can make or break you as a trader. I'm talking about liquidity. If you want to be consistently profitable, you have to understand this. So let's jump right in. Have you ever had this happen? You're in a trade, everything's looking good, and then bam, the market just dips down just enough to hit your stop loss, and then almost immediately it rips back in the direction you predicted. It feels personal, right? Like the market is literally hunting for your stops. Well, today we're going to show you exactly why that happens. So here's our game plan. First, we'll talk about the market's hidden fuel. Then we'll get into mapping out where the money is. After that, we'll break down the liquidity sweep strategy itself, followed by a step-by-step blueprint. And we'll wrap up by talking about how this will help you see the market in a completely new way.
Okay, first up, the market's hidden fuel. Let's pull back the curtain and look at the invisible force that's really pushing prices around. So, what is liquidity, really? At its core, it's just money. Think of it as these giant pools of buy and sell orders, especially all those stop losses, just sitting there on the chart. To make any big move, the market needs to go and grab that money. It's literally the fuel that generates momentum. It's the lifeblood of the market.
Now here's where it gets interesting. The source material brings up the idea that big institutions might be setting up these scenarios on purpose to fool retail traders. Now, whether you buy into that or not doesn't really matter. The key takeaway is the same. You have to understand where this liquidity is to avoid getting caught on the wrong side of these moves.
Okay, so we know what liquidity is, in theory. But where the heck do we actually find it on a chart? That brings us to our next section, mapping the money.
Liquidity loves to hide in plain sight, in really predictable spots. We're talking about all the places traders love to stick their stop losses. Those obvious equal highs and lows, major swing points, trend lines and channels, session highs and lows, and of course your classic support and resistance levels. These spots are basically the market's gas stations, just waiting for price to come and fill up. All right, so now we know where to find the fuel. How do we actually use that knowledge to our advantage? This brings us to the heart of it all. The liquidity sweep strategy.
Okay, to really nail this strategy, you have to get this one key idea, inducement. An inducement is, well, it's a trap. It's a price area that looks like the most perfect, obvious entry point you've ever seen. It's designed to trick retail traders into jumping in, but its real purpose is to build up that big pool of liquidity, all their stop losses, so the market can sweep it all up later.
This slide really breaks it down. On the left, you've got the inducement zone. That's the trap, the obvious entry. But on the right, you have the extreme zone. That's your high probability entry. And notice, the market only gets there after it has swept the liquidity from the trap. See how it works? The trap is the fuel, the extreme zone is the real destination.
This all sounds great, but how do we actually trade it? Let's get practical and break it all down with a super clear, actionable plan. A step-by-step blueprint.
Okay, here it is, the four-step process. First, you've got to identify the overall trend. Simple enough. Second, spot that inducement, the trap that's going to act as fuel. Third, and this is probably the most important part, you have to be patient. You wait for the price to actually sweep that liquidity and tap into your high probability zone. And finally, you confirm your entry. Usually that means dropping to a lower time frame and looking for what's called a change of character. Basically, a small shift in the market structure that tells you the reversal is for real. When you start to actually apply this, it's way more than just learning a new setup. It's about fundamentally seeing the market differently.
But before you risk a single real dollar on this, a huge word of caution from the source material. You have to backtest. It is strongly recommended that you backtest any new strategy at least 100 times. A strategy's win rate isn't fixed. It depends on the market, your own psychology, your risk management. So please, do your homework and let the data build your confidence.
The trader in the source material put it about as clearly as you can. They said, personally, I never enter a trade without identifying a liquidity sweep pattern. That just shows you how absolutely central this idea is to their entire trading process.
And why is it so central? Because the potential reward is just massive. The source gives a real trade example using this exact setup, and it resulted in a 15-to-1 reward to risk ratio. I mean, think about that. By just being patient, waiting for that sweep, and entering at that high probability zone, you can set yourself up for these incredible home run trades.
So let's wrap this all up.
After everything we've just covered, it really boils down to one simple question you have to ask yourself every time you look at a chart. Are you the one providing the fuel for the market's next big move? Or are you the one using the map to get to the real destination? Thinking like that, well, that could change everything for you.